your initial reaction? This is way better than expected.
Thanks for having me. Certainly, and this would be very encouraging, I think, to the markets. We have to realize that this PMI is more of a sentiment indicator on a sequential basis. And clearly, we have already, based on the high-frequency indicators, see many of China's factories and the key sectors have already been returning operation rates of 90 to 100% in the last week of March. But that in itself, we would alert that did not prevent the fact that the overall contraction in manufacturing sector and services sector remains deep. By our estimates, still at 10% for manufacturing and 30% for services in the last week of March.
China's economy is far from back to normal. I mean, where will demand come from, given that a lot of the countries around the world are on lockdown?
I think number one is certainly there would be a fair amount of recoup of the loss of the domestic demand that had occurred in Q1, and we actually expect somewhat of 1.6 percentage point of the loss of demand of 5 percentage points to be recovered in the coming quarters, particularly focusing on Q2 and Q3. But I think you're very right in pointing out external demand clearly has already deteriorated significantly in the last weeks of March, as we saw from the plunging global PMI, and also anecdotally, and the many Chinese factories have already been reporting canceled orders in the past week. That, in our view, could bring export growth down to as much as 20-30% year-on-year in Q2, and dragging down external demand and net exports by 2 to 3 or even higher percentage points for Q2 GDP. So clearly, in our view, that the government needs to step up the stimulus measures, and not only the targeted relief measures that they put out in Q1 and during the shutdown period, but also, the pro-growth, investment boost or consumption boost measures, and in Q2. Otherwise, and we see significant risk that the stimulus may come in too late to ensure a recovery of GDP growth towards, say, 5%. I mean, we hear from the Policy Bureau last Friday, they continue to reiterate maintaining the economic the social development targets, and seems like, even though they may not actually print GDP growth target this year, which we will see, as the annual NPC meeting possibly later this month, next month, late April.